evening. This is Ifan from the Black Room, and we are doing an open house this week. So everyone, whether you have a subscription or not, is invited to join us and come trade with us. And I thought I would do a video to just outline the basic structure that each and every one of our trades will follow, so that you can be familiar with it as you come into the room and start to see trades posted. Okay, so I'm just going to use this HSIC as an example. Today it was gapping up. I thought it was clearing some significant resistance, so this was a candidate for a long play. Okay, so this was off of the 2-minute chart here. Okay, so it immediately started off strong. We got a little bit of consolidation in here, and this is what the calls will look like, which is that they'll have an entry price and a stop price. Alright, and then they'll be outlined like this: HSIC long 8380. So that means once it breaks 8380, that's when you want to be entering. Okay, and then if it takes out 83, that's where your stop will be. So it's an 80-cent stop. Okay, so it's an 80-cent stop. You want to share size for your R unit for 80 cents. Alright, and then on official calls, this was just an idea given in the morning. On official calls, they will be managed, so targets will be given. This is just outlined at 2R, so $1.60 away. Just kind of an arbitrary amount because it was running into a little bit of void on the daily and weekly chart. Okay, so that is just marked up there. But you will have, at the very least, on ideas, entry, stop, and then on all official calls, they will be managed for you. So we'll tell you when to exit, when to take profit. Okay, so that's going to be the basic structure. If you're interested in joining the Black Room, this is what you'll see throughout the day consistently. But that's not really what I want to talk about. I just wanted to have that baseline there first, and then talk about just probability and trading. Okay, now probability means a lot of things, and if you want to get really specific, we can talk about probability of a type of entry, whether the probability that it works, the probability of certain strategies. But I want to keep it as broad and general just for our understanding. And honestly, the subtitle of this video could be why trading is hard. I know it may not be the best attempt at advertising the room and our open house, but that's just the truth. And if I discourage some people from looking into trading, I think that's okay. Because I think for those of you who know that either you're already doing it, that's what you do, and you want to see if the room can help provide some of the ideas, take some of the scanning load pressure off of you so that you can benefit from some of the ideas and scanning that the moderators do, then you can come see if that's for you. If you're really interested in trading, you want to try it out, find a place that will give you education, give you real-time analysis, real-time examples, and give you the plays ahead of time, then that's also the place for you. Okay, so I just want to talk about a little bit about these basic components and how we should view trading. And really, if at the very least, when we talk about this, it should at least remind you of the respect that we need to have for the craft and just the difficulty it entails. Okay, so let's just say we're starting out here and we just want to see this HIC go higher. We have a bias on this HSIC as a long. Okay, and we decide, okay, we're going to use this entry here. We ignore the stop here, we ignore this target for now, and we just say we get in it on this green bar. Okay, we'll zoom in here so we're not distracted by everything that happened after, and we say, okay, we're in. Okay, you get in, you probably got filled somewhere close to 83.90. That's where I got filled because this was a little bit spready. Okay, and so now a lot of people will say the trade is working or the trade's a winner as long as it goes up. So let's just say that you have a 99% chance that this trade goes higher from the point that you get in. Okay, that it doesn't just print that price and you buy the absolute high, and for the rest of all time, it never goes above that price. Okay, I would say 99% chance that it goes higher, whether it's 1 cent, 2 cents, 5 cents, right? Let's just say, we'll say 99%. Okay, that you didn't just buy the absolute high and then you never see it again. Okay, now once we put in and once we have a stop here, we have to acknowledge that the chance that this goes higher without taking out this price is going to reduce the odds of our success, right? Because the chance that this goes higher but can go down, any percent can go all the way down to 0 and then go back up higher, right, is a higher chance than saying, well, I can't take breakout 83. So by having a stop, we do reduce the odds that this becomes a winning trade. Okay, now whether or not you want to have a stop, I am 100% believe you should. I've worked with a lot of traders. We do offer one-on-one coaching with T3, but just I had to tell you, as far as and traders have a lot of different issues, whether it's they trail too tight, they go to break even early, whatever the issue is. The issue that I've seen shorten careers the fastest is not having a stop or not willing to take your stop because you don't want to be wrong. You think it'll come back. Okay, it becomes a huge distraction. You end up missing a lot of the other good trades, and then it only takes one disaster to wipe out many winning trades. Okay, so for me, there's no doubt you should have a stop. Whether you want to have a psychological stop that when it gets to that price, you wait for a bounce and get out, or a hard stop. I use a hard stop, which is I put in the price in the system. If it takes me out, I'm out. I'm wrong, I lose 1R. Okay, but you should have a stop. Okay, now we say we have this entry. We have our stop in the system. Okay, now we need it to go. We can't just have it go 5 cents. We can't just have it go 20 cents. We need it to go some amount. We have to have a target, right, that it can get to before reaching our stop. Okay, and if we're doing a day trade, this needs to go before the end of the day. So this is my time around 6:45. I need it to go by 1 o'clock. Okay, all those restrictions are going to reduce our probability, okay, that the trade is a winner. So, right, so if it's a day trade, we need it to go up by the end of the day. We can't have it go up and down and then tomorrow maybe it opens up at our target. That's not going to work. Okay, we also can't have it take out our stop. And I'm using 2Rs here. Whether it's 2Rs or whether your target is a new high here, 1.5Rs, it's not really the point. The point is you need it to go to a certain price. Each of these conditions reduces your chance of success, but each of these conditions are also necessary. Okay, the percentage itself, 15%, 15%, is not important. The reason I chose these is just because, and these could all be different. Like this could be 20, this could be 30, this could be whatever. Is because I just equal weighted them because last year, if you took every single one of my hundreds of calls, our batting average would be 54%. Okay, so it's just I wanted to arrive at that number, but really these numbers aren't important in themselves. And then the Sharpe ratio last year was 1.9, so pretty close to 2Rs. The numbers aren't important in themselves. It's just that we know that each of these conditions will reduce the probability. You can't say that this will go, it has a 99% chance of going higher or any percent chance of going higher for all time, and then say if it goes by the end of the day that chance is equal or higher, right? It has to be lower because we are now putting some kind of restriction, and it for all time includes by end of the day. Same with it needs to go higher, but it can't go below 83 first, right? Every scenario that it does go higher and also does take out 3 is included. Okay, does that make sense? So you can see, even if you believe to be a very good technician, okay, and you say, well, with this pattern, it will go higher, right, some amount of the time. This is why a lot of analysts and talking heads will just say higher, lower, or if they give you some kind of target price, then they don't give you buy win. It's because each of those conditions that they add increases the chance that they are wrong. So the point is that when we get these calls, every single one of these calls will have these conditions met. Okay, so I just want to talk about these components, talk about that they're necessary, and just understand that it's hard, that trading is hard. The chance that you have, you can say, some people say, well, I just want to have an 80, 90% batting average or win rate, right? The feasibility of that, knowing that we have these restrictions, that in order to have this kind of structure, each of these reduces the chance that it gets there, is in play. So the point is, you really have to know your stuff. To even start at this is a 90%, 99% chance higher, and have all these things reduce your chance of success, but still maintain an above 50% win rate and about a 2R Sharpe ratio, meaning each winner is about 1.9 times, about 2. If you're using a 2R all or nothing or type of management, right? So each of your winners is bigger than your losers, and you're winning more often than you're losing. Okay, so then you really have to know your stuff. And I don't think that my numbers and my stats for these trades is exceptional or best case scenario. I actually have no doubt that if you looked at the other moderators, Sammy and Ryan, that their numbers are actually better. But I'm using these numbers, and rather than pick arbitrary percentages here, just wanted to arrive at a number that is reflective of my performance. Okay, so hopefully that was easy to understand, and you kind of get an idea of our general approach to trading. So we will be having an open house through the end of the week. Okay, we did have a one today, and I thought it was very productive. We had some nice winning trades, and we also helped answer a lot of questions. I think people got a good feel for it. And so as the week goes on, though, and trades start to pick up more and more, you'll see that there'll be a lot more trading and a lot less discussion in the room. So, but hopefully you are interested in joining us, and hopefully I'll see you in the black room. Have a good evening, all.